Good afternoon, everybody. It's Wednesday, the 18th. Let's look at this market. The S&P 500 gapped lower this morning. Huge rally up beyond that declining 5-day moving average, and then after the Fed minutes came out, it was just time to smash these things. Apparently, as the sellers really moved in there, and you can see that in relation to the volume-weighted average price, we did stay kind of stuck below it after that event. And here's the VWAP since the event, which is we did get back above that, but the fact remains we remain below a declining 5-day moving average. When we back it up just a little bit, here's the possibility. It's quite possible that this is a bearish trap. One thing for sure is we've got a lot of volatility in this market, but a lot of times what we see is we see a slight lower low that takes out stops and brings in new shorts, but the 50-day moving average is still declining. So with a 50-day moving average is advancing. It's the 5-day moving average which is declining. So we've got a mixed bag, and that's why we're seeing so much volatility in here. That uncertainty comes as people are transitioning and rebalancing very large portfolios. There is a major knife fight in this market right now, but we have to be aware of all potential scenarios and how they interconnect with the time frame. So on one hand, we have the possibility that this was a shakeout today. On the other hand, the declining 5-day moving average tells us we still have to be cautious. The Nasdaq came into this little band of support, and it held there throughout the day. You could say though that just looking at this time frame, and this is where it comes down to, with so many mixed messages. There's a head and shoulders pattern is what that looks like, and then you look at the daily time frame. We've been stuck below this 50-day moving average. Is this the little shakeout? Perhaps this low. Today's lows are going to be very important. That's the main point to recognize. If we can hold against today's lows for the rest of the week, then I think you might see that these markets do in fact get squeezed higher. The Russell 2000, I had mentioned that in a chart midday that perhaps this is a little, what we might see is from a failed move comes a fast move lower after breaking below that yesterday. So this is going to be the key level to judge against here. But we can't say that the buyers are in control yet, not with a declining 5-day moving average. So again, mixed messages. We've got a declining trend line. We look at the daily time frames in here and kind of just back them up a little bit and see where we are in relation to the year-to-date volume-weighted average price. The Russell, we're still well above it, but in the Nasdaq, it's pretty close by, and we've seen a lot of underperformance in these stocks. The semiconductors showed some outperformance here today for a change, as they did break out of that little box that we've been talking about and closed above it as well. So if there's going to be any continued upside in the semiconductors, it will need to hold above 52.50. Now this setup right here is kind of similar, I think, to the biotechs when we were talking about them and the potential for a bounce. I guess it was back in, well, let's take a look. Let me just back this up for a moment. Well, it's right here, I guess. This, above this level, we were talking about the possibility of, it pulling back to the 5-day moving average, rallying up. Then we were looking for a pullback to make a higher low. And then if it could break that level, it would make a higher high above the flat to rising 5-day moving average. Instead, what we saw is that it failed. And now in these biotechs, we're back up against this prior little area of support, which has been resistance at 265. And it looks like, well, hey, is that a buy? Well, not so fast, because we've got that 50-day moving average in there, and realistically, we're just in a big mess in these biotechs. So they send these mixed messages, and our job is to listen to the market objectively and to take the risks appropriate for our time frame. So going back to the Nasdaq, for instance, we're taking a look at this level. I mean, if you wanted to be a bottom fisher and bet against these lows, well, then possibly that's the right thing to do. You have to do what's right for you. But right now, there just is no clear advantage, long or short, in these markets. Apple bounced a little bit more today, as it is closing in quickly on that 20-day moving average. And that 20-day moving average is currently at 95.90. When I mentioned over here a couple days ago, it was at 97.20. So we've seen that moving average drop by $1.40, and we were talking about the possibility of touching the 20-day moving average. Well, if the stock just turn sideways here for the next 3 or 4 days, it's likely to just that is the 20-day moving average to come down to it, giving it the moving average property. But the point of recognizing that trade a couple days ago was that we had what looked like the potential for a bear trap in here, similar to what we have the potential for in the Russell 2000 and in these in the S&P 500, that this could be the potential for a bear trap. So if they kind of get led the way Apple does, then Apple, if you're long for a move up towards that 20-day moving average, I think a worst case stop should be just under yesterday's low. And it's still mixed messages across all these markets when you look at various time frames. So know your time frame is the most important thing right here.